Good morning, good morning. Let me know if you guys can hear me. And let me know if I'm too loud. It looks like I'm too loud. One second. Testing, 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 testing. It's been like over a month since we've done a YouTube forecast. Right now I have to set up OBS all properly. So one moment. I think we're good actually. I think everything's set up, right? Let me know, guys. Let me know in chat. We'll get started in like 10 minutes. You're here early. I just wanted to start early to make sure everything's all right. If you've been missing the forecasts, it's not like I stopped for a month. We've been doing them in the Discord, just not recorded. Just been doing them live. So we've been doing them. If you're not in the Discord, I recommend you join that so you don't miss that. Start early to make sure. All right, just checking the audio on my phone, looking good. If you've been missing the forecasts, it's not like I stopped for a month. We've been doing them in the Discord, just not. All right, I think that looks good. The lo-fi's popping in the background real nice. Audio sounds crisp. I think we're chilling. Make an announcement on my IG. Bro, we were I hope you're not lost. I mean, the point of these forecasts is for you guys to learn as well. Omi, I want you guys to be able to fish for yourself. So I want you guys to, like, if I don't do a forecast for a while, do them on your own, right? See them as a nice test for yourself. See if you can implement all the concepts we've been learning here together. Because you're only going to learn if you implement them on your own. You want to have to depend on me forever, you know? All right, one second. Let me make some announcements. What am I doing? Okay, link. Where is it? All right, we're just gonna start at 135 because I have to do some things here. All right, you have this model of ICT that's for that mate. Yes, appreciate that. The goal is to be as simple as possible because in trading, less is more. In life and everything, I think less is more. Emmanuel, how do you know which impulse shifts are valid? Because damn, I've been getting cooked by CHF pairs. Well, funny thing about CHF pairs, if you haven't been tuning in, I always tell myself, I'll tell you guys this. If I had to choose my least favorite currency, it would be the CHF. It would be the franc. That currency, for the most part, has never really treated me well, and it is extremely choppy. Example A, exhibit A, exhibit B, exhibit C, exhibit D. Actually seeing some nice displacement here, but for the most part, it can be really choppy, really consolidating, as you can see right here. It's not very nice. So when I see like a setup on like CHF pairs, I actually now more times I tend to just avoid it, even if it's nice. Honestly, if I see something here, I'll tend to just avoid it just based on how like historically I've been chopped up trading CHF pairs. They're not kind to me. That's just my personal experience, of course. If you can trade them successfully, good on you. Well, we'll get into all this. We'll get into everything soon. We're gonna go first over the dollar and that's. How you guys been? It's been a while since we've been on the YouTube streams. I'm trying to get another video worked up for the channel as well on pivot context. That's the next video. Pivot context. Hello from Singapore. It's 1 a.m. at night. Damn. Respect the dedication, Jove. The indicator cannon, unfortunately, will never be free. Nothing worthwhile, nothing of value is free. A lot of time, a lot of hard work goes into creating those indicators, as well as a lot of time spent updating them and creating new features and new ideas for the indicators, that it really doesn't make sense to do all that for free, right? Time is a scarce asset. It's the same thing. Any business out there doesn't just give away stuff for free. It doesn't really make sense considering how much work and time is put into it. So yes, unfortunately, it will never be a free thing. How do you maintain confidence while on a losing streak? Well, that just goes to how well do you know your data? How well do you know your model? Right? You should know you should be aware of the numbers based on your win rate, based on your model, based on all your numbers. How long of a losing streak is normal for you? And you find confidence in the losing streaks through just knowing your model inside and out. Knowing that based on your win rate, you're going to inevitably face a certain amount of a losing streak. It's going to happen. So that really just goes to how confident are you in your model being successful. I thought you'd be like ICT after his private mentorship, give everything free. Yeah, unfortunately, that just is not it's obviously not a good business model for. Again, just considering how much time goes into building those things. Anyways. How do you know the fair value gaps out of hold? We'll go into it. You'll get an idea. If this is your first time, you'll get an idea of like all that as soon as we start. I believe you'll end up like ICT. I really hope I don't end up like ICT. For funny reasons, yeah. Not a fan of ICT, the person, to be honest. The concepts, yes. But him, not a biggest fan of that. Can be a bit unhinged. But anyways, let's not speak negatively. I owe a lot to ICT. Definitely do owe a lot to him. Wouldn't be here without it. No. Appreciate that, Emmanuel. Appreciate that. Again, guys, we'll start in a few minutes here. If you're just waiting around wondering why we haven't started, we're going to be starting at 1:35. I hope Mr. Pickle doesn't get captured in a van You got told about the market makers. Yo, that's what I'm saying. Like that story, that's the craziest thing ever. And I am disappointed in myself for actually in the beginning when I first saw ICT, somewhat believing that for a moment. And I really did almost believe that for a moment. I think I believed it for a few days. Till I got out of like the trance I was in or whatever the hell. Because in all honesty, guys, it is almost like a cult. It really is. Like some of the ways some people talk about ICT. And the whole Robin's Cup dilemma. Anyways, again, let's not get too into that. Again, I love ICT. Anyways, sir, give me an example to use IRO Euro. We're gonna look at a whole lot of that. He does sound very convincing. Yes. We all fell for it at first. Yeah, man. Yeah, man. Crazy. Some TDT guys selling a course for 130K. Oh yeah. I think on Twitter, some guys, I don't know if you're talking about the same guy, but I don't know if you guys know Inner Circle Morpheus. He was selling, I think, a course for like 100K, or I think it might be at 130K as well. Crazy stuff. Crazy stuff. All right, we're just gonna get started here. Let me alert the cord one more time. We're just gonna get started. Yo, this lo-fi is hitting. This lo-fi is hitting real good. Yeah, it's a cult mentality when you just discover ICT. All right, we're gonna get started. Chart colors can be found inside my Discord in the frequently asked question section. But all right, first thing we must do here is get the economic news calendar pulled up. So let's get that up. That's the first thing you want to be looking at every single week. Hassan, my bad, Hassan. I actually posted an entire video on my YouTube. It's like almost an hour and a half. It's literally a free workshop. It's a workshop that we held breaking down every indicator, how to use it, how I use it, literally. So your exact question is answered in that full hour and a half plus video. So it's the most recent video posted on this channel. So if any of you guys are wondering exactly how to use them and how I use my indicators right here, watch that video. I know it's long, but there is a lot of gems thrown into that, in my humble opinion. There's a lot of good information in that. Very good information in that. Like, not even just regarding the indicators, but regarding like how to view price and how to trade, basically. Lots of good stuff in there. Anyways, let's get into it. I'm gonna close chat right now so I can focus up here, and then I will look at chat once we are done, so I don't get distracted here. All right, so anything from now on I will not see. So let's begin. First things first, we want to be looking at the economic news calendar every single week. It is our roadmap. It's going to set us up with the idea of what days we want to be very careful of. Like, for example, right here's a great one: bank holidays. We want to be very aware of when bank holidays are, and be very aware of when big 3 news events are. Like, Also, right here, NFP. It's an NFP week. NFP weeks are the first Friday of every single new month. So the first Friday of every single new month, you should be ready and already aware that there's going to be NFP over here on Friday. It's usually on Friday. It's a weird week with a bank holiday on Friday, so they just moved it up to Thursday, but it's usually on this Friday. So a bit of a unique week here. Anyways, starting it off, on Monday, we have no news. You guys know what I say about news this Mondays. They lack the energy. Why? Because news is what injects volatility into the market. So when we lack news, we lack volatility and we lack energy. So typically what happens is lower probability price action, lackluster displacements, not a lot of follow through on moves. And these newsless days typically do occur on Monday. You typically won't see red folder news on Monday. Typically, of course, there are Mondays which have red folder news, but for the most part, Mondays lack red folder news. So for the most part, Mondays are the accumulation day for what the weekly profile might be, where we may consolidate on Monday, maybe on Tuesday, we manipulate into some sort of higher time frame PD array, expand lower, followed by Wednesday, again, more expansion, Thursday, and then on Friday, that's what I like to call the TGIF. Thank God it's Friday setup, where we retrace back into the weekly range. Just what I mentioned last week on Friday, in case people were wondering, what is TJF? What is TJF? All that is just trying to capture the reversal or the retracement, the retracement of what would create the higher time frame wick of a weekly candle. So for example, if we're super bullish all week, Monday, Tuesday, Wednesday, Thursday, all expand. Friday typically likes to cap off the week, create that higher time frame wick, and retrace into the 0.2 to 0.3 fib level, which is what I was marking in those screenshots on Discord. In case you're wondering what the hell are those numbers, it's just in an area that price likes to retrace into on those TGIF moves. It's a nice target, essentially. But we're not going to dive too deep into that right now. That's not the point of the forecast, to do TJF. Maybe that's actually a great YouTube video idea. Actually, a great YouTube video idea to do. Because I actually want to be more active on YouTube. I want to make more videos for you guys. Because I've been doing like just one video a month. I want to try to like up that to 2 and maybe 3 at some point. But yeah, I want to be more active on here. But anyways, okay. Back to the economic calendar right here. Monday, we have no news. So just be very cautious on Monday. Now, I made a tweet about this, a subtweet about this under the economic calendar outlook post I posted on Twitter. And I said that specifically this. I'll just read it right here, because I think I just said it best right here. Regarding caution, whenever I say caution, when I say caution, that doesn't mean to avoid that day outright. When I say caution, that just means to be more careful, because typically what happens on these days is that price likes to misbehave. Is that a guarantee? No, it's just the probabilities and what tends to happen more times than not. But if you see clean PA, if you see the most gorgeous textbook setup, take that damn setup. Don't avoid good PA because I said caution, or because Monday's a no news day, it's going to be ass. No, if you've seen clean price action, just trade the clean price action. All I mean by caution is just to be on more high alert, not to be ultra aggressive. Just again, be on high alert, but don't just avoid the most beautiful setup ever. And yeah, if you're new though, I would recommend actually just sitting that out entirely, and rather than placing trades, just tape read it. If you're a brand new beginner, yes, I would actually recommend you just tape read that day, because you may not know what clean price action looks like yet. You're new. So yes, you want to gather data on that, and as you get more experience, then you can start judging for yourself. All right, we have a news this Monday, but I see clean price action, and you know what clean price action is at point in your career, because you've been in the charts for a while. You have that screen time, that experience. That screen time is super huge. That intuition is a real thing that will really level you up, and that only gets obtained through hundreds and hundreds of hours on the charts. That screen time does play a major role. So that being said, let's move along. Tuesday, we have GBP news. We have JPY red folder, USD red folder. We actually have Powell speaking over here at 9:30 a.m. So that's annoying. I don't really like trading when Powell is speaking. So Tuesday, I may just be waiting until he's done talking, and then I'll look to trade. And we'll see when that happens. I am not a fan of trading during Powell speaking. Anyways, we do have 10 a.m. red folder news as well. So we'll see how price action sets up. We'll make that call on that Tuesday. We'll see if there's anything clean right there. On Wednesday, we have red folder news over here at 8:15 USD. Again, if you saw the Twitter post, I'm just going to screenshot it in case you guys don't see the Twitter post. See if I can put that here. I said caution. Again, this goes into what I just explained. Caution does not mean avoid the day entirely. Caution does not mean, oh, I see a clean setup, but Pickle said you shouldn't trade that day, so let me just not take it. No, exactly. Remember what I just mentioned. Just means in high alert, but if you see clean price action, take clean price action. Why I say caution, though, is because typically the day before big three news events are lower probability as the market likes to await the major news driver the following day, right? It doesn't want to make its move because that big three news driver is likely going to actually be the reason price actually makes that big move. That's just typically what happens. Whereas this week, again, it's a bit of a different week where NFP is on Thursday. So now that day before moves to Wednesday, where on typical weeks, it's usually Thursday is the lower probability day and Friday you want to be, the NFP and you want to trade until after NFP. But anyways, Wednesday is now your day before big three. So you want to be, again, a bit more cautious. That being said, if you see something nice, I'm going to take it. So I would advise you to take it as well. Anyways, that is that. That is Wednesday. And then Thursday, of course, we do have NFP. And we have CHF CPI right here as well. That could be interesting for CHF pairs, which, again, as I was mentioning in the beginning, I'm not really the biggest fan of. But yeah, on to the... What else? And that's it. That's pretty much the week right there. We're going to do a live stream for NFP as well. We're going to be eval expediting. So now let's get into the dollar right here. Let me just check chat. I think everything's good. What is going on? Appreciate that, Gabriel. Is there a fight? What's going on in chat? I need a mod. Is there any, like... I need a mod in chat right here. Do we have any volunteers? Let me pick someone I know. Yo, Volt, are you in here? I'm gonna make you a mod. I trust you, Volt. You're a chill guy. All right, Trini. What's up, Cam? Let me make you a mod, bro, because this chat's getting interesting. Let me add you as a mod. All right, appreciate you, gangy. All right, Volt, gotcha. There you go. All right, let's just keep on diving into it, and just gonna go over this list right here, the forecast list. It's a short little list right here. If I see any interesting crosses, I'll just send them in the chat right here. But anyways, on to the dollar. So first thing we always want to look at is the world reserve currency. It's going to affect all these majors right here. So you want to be looking at dollar first. You cannot trade these majors, in my opinion, without looking at the dollar. The dollar bias is going to give you the bias for all these majors. So it actually saves a lot of time. It actually makes things a lot simpler. By just analyzing one asset, we can get the bias for 7 right here. Okay, so we're going to look at the dollar first. Now, starting on the monthly, you always want to do your top-down analysis from the highest time frame, which for me would be the monthly, down to the weekly, and to the daily. And that is how we're going to operate. And the way we're going to find bias, and the way I find bias, is appreciate that, Vol. I just saw you deleted everything. The way we find bias is by using order flow, reading the fair value gaps, and candlestick logic, which I have a video on that. But that is the 2 ways we find bias, right? So first things first right here, reading the order flow, we have a very bearish monthly order flow leg from the most recent swing high, recent swing low. with the fair value gaps in the middle. So that's pointing lower. Order flow is trending lower. Now let's use some candlestick logic. Well, over here on a monthly basis, it looks like we are currently running this monthly swing low. We are very comfortable. We have a day left in this month. So ideally, if we don't want to continue pushing lower, we just close below it like that. And we should close below. Ideally, we do that. But at the moment, it looks very comfortable trading below that low. So where can we draw towards to? Just finding some close proximity discount arrays, because price is always drawing to either a discount array or premium array. What I see right here is just this current low right here, which would just be previous week's low. And on a monthly basis, we can just draw this one out. That would just be the next discount array. It is a ways away, so not really expecting that to get hit this week. But now diving into the weekly to get a better, clearer picture of what can happen. We have price, again, using candlestick logic right here, just seeing how the candles are respecting or disrespecting certain levels. We will notice that this weekly candle closed aggressively below this weekly swing low, below this discount array. So what's happening here? We're disrespecting a discount array. That is a very bearish argument. I do like that. We can just continue seeking for now just this previous week's low. Very clear draw right now, eventually. Just looking for lower prices on dollar. I really don't see any reason to be bearish, or sorry, to be bullish right now. So that looks good. Going on to the daily, if we want to move lower, we need to find where we're moving lower from. So we just established that on the monthly and weekly, we have a bearish bias. Very clear, right? We're looking for lower prices, but now we need to answer the question of narrative. All that is if we're moving lower, where are we moving lower from? And that's what we're doing as we move down the time frames, just looking for a PD array that we can actually frame shorts out of, right? In alignment with that higher time frame bias, which was bearish. So over here on the daily, we do have a pretty clear area. If we want to move lower, it can move lower off of this right here. This is overall fair value gap, volume imbalance, liquidity void, a lot of imbalance going on right here, overlapping with this level right there, with that fair value area. That looks super clean. That looks really great for just a retracement, ideally early on in the week, and then just expansion down into the lower prices. So I think dollar looks beautiful going into this week. I think it has a lot of clarity, which should bring a lot of clarity to some of these majors right here. So this right here is the dollar idea. I would want to see it respect that. I don't want to see any deep retracements, because what's happening at that point, if we do start seeing deep retracements, for example, into like this fair value gap, I actually would expect it to run that higher, to go seek that high and have some sort of flip context right here. Because at that point, what's happening is we're disrespecting this area of fair value, where, remember, with areas of fair value, we don't want to be seeing deep stings into them. If we do, it's likely flip context, seeking the opposing liquidity. Because remember what price is always doing, offering fair value or seeking liquidity. If we're failing to offer fair value right here, it's likely going to seek that opposing liquidity. So that's the idea on dollar. I think it's very crispy clear right here. So I like that. That should give us some good ideas on euro. So let's just hop onto the majors and then we'll make our way back around to indices. So euro is pretty much the same exact thing, just inversed. They have a very close correlation. Euro has a very close correlation with the dollar here. So pretty much the same exact idea. If we look at euro, we'll find a daily fair value gap right here. We can use this to potentially move higher. This is the narrative. If we're going higher, because we have a bullish bias, it could happen off of that. What I also like about this, just using candlestick logic, is we are sweeping previous day's high, seeing a large upper wick right here. This on a lower time frame should be lower time frame fair value gaps, which it is right here, lower time frame fair value gaps. Although currently not really respecting it as good as you would like to see. But again, all of this will still be contingent on what dollar does. So we'll just keep a close eye on dollar. Once dollar comes into that daily bearish fair value gap, we can start looking at potential euro longs right there. I think that looks really interesting. So for the high probability setups, just be waiting for this area right here at this current moment. That's what I would be waiting for any of these fair value gaps right here. I like that. So let's mark that on the long list. Long watch right there looks super clean. I like euro. GBP also looks quite interesting, although I think it is a tad bit weaker just based on how that candle formed. But again, I do like it. It also has very clean daily bullish context as well. If we're going higher, we can go higher off of that. So I'm also going to keep that on the long watch and just gauge the strength when it comes time to when dollar comes into that bearish daily fair value gap, I'll just gauge the relative strength between those two. And then just what you always want to be doing is trading the stronger asset. Always trade the stronger asset, right? You can't just look at dollar and euro and just say, I'm a dollar and euro trader. I only look at euro, because you need to look at your closely correlated assets. You always want to be making sure you are trading the strongest one. If you're bullish, trade euro because it's stronger, essentially, right? You always want to be looking at the correlated assets. So don't make that mistake. Always do your relative strength analysis. That is very huge. It is very huge. Moving on into AUD USD, I could already see that we are just not as strong. So pretty much what we're doing right here with the majors is we are getting a clear idea on dollar. And when we have that clear idea on dollar, all we're doing with the majors is we're trying to find the strongest one in accordance with that. That's it. In the case of these base pairs, where USD is the quote, where if USD is the base right here, that sort of switches, where if we're looking for a weak dollar, now we're looking for the weakest of these three right here, of these three USD base currencies, because they do move in line with dollar, whereas these move inverse to dollar. So again, just doing the opposite thing. So basically what I'm doing here is just a relative strength analysis between these four right here. And I've already determined that Euro and GBP are the strongest. And if we take a look at AUD and NZD, look what happens. Does that look strong to you? Does that look stronger than Euro and GBP to you? Not at all. So if I have a bearish bias on dollar, I don't want to be looking at these assets right here. So for me, my analysis pretty much just stops right there. And clearly we have been chopping, we have been really disgusting, just consolidating for a lot of recent history right here, based on AUD and NZD, right here. So for me, this is my analysis. It stops right there. Not very interested in that. Not going to mark them up in any sort of interest list right here. Now, moving on to, again, the USD base currencies, where USD is the first listed asset. In case you don't know, for a Forex pair, the first listed currency is the base currency, and the second listed currency right here is the quote currency. So that's what if you don't know what I'm saying with between base and quote, that is what I am referring to. Base, quote, base, quote, base, quote. All right. So now USD is the base. It's going to move in line with dollar. So now we're looking for the weakest asset between these. So let's just compare real quick. USD CAD, USD CHF, and USD JPY. Well, right off the bat, I just noticed that USD CHF is the weakest one right here. So this is what I'm going to want to look at if dollar wants to continue pushing lower already. And I think it looks the cleanest. If we just go do our higher time frame analysis real quick, it's extremely weak. USD CAD, not nearly as weak as USD CHF. And USD JPY just looks like it's chopping around right here. This is where my analysis would just stop, right? USD JPY has just been chopping. Why do I want to look at anything else deeper than this? USD CAD, also not very clear right here. USD CHF, ooh, well, that's quite interesting. We're very bearish, strong bearish, aggressive candle lower, bearish displacement. What's happening on the daily? If we want to move lower, where can we move lower from? Well, look at this. We have a daily bearish fair value gap right here. What does that align with? Well, we have a bearish daily fair value gap on dollar. So if we want to push lower off of that, USD CHF is in the best spot to do so in terms of alignment with that same bearish idea. So this right here is very interesting for short. So we're going to add that to the short watch, and that is as simple as analysis can be. That's our interest list for the majors. These are pretty much irrelevant for us this week. And that's it. Looking clean. Moving on to let's look at oil first, and then we'll make our way back to indices and wrap it up with that. Okay, so oil. Let's look at oil. It's been interesting. So this was pretty expected, this big retracement after sweeping these highs. We're in a consolidation. What tends to happen in consolidation conditions? We just sweep the externals to move back into the range, potentially sweep the other side, and then continue chopping. And that's exactly what happened right here with oil, where we just sweep this external range liquidity, this external of this huge consolidation, and displaced right back down as we see right here. So if we go to the weekly, I know you see this weekly for value gap being marked up. That's not something I'm really interested in. This is not something I'm really interested in for higher prices. In fact, I expect this to just potentially either just chop right here, as we are right at the equilibrium of a consolidation range, which is not the highest probability area to be trading in, or just continue pushing lower. So for me, CL is not really too interesting right here. Even off of this daily for value gap, just not too interested in it. If we do want to move lower, we know where it would happen from. But if I do want to find like a level to actually trade potentially, if we can confirm that bearish order flow down to this leg right here, like a new daily bearish for value gap right here, that could be quite interesting. Just showing that daily bearish confirmed order flow down to this clear draw. That wouldn't be too bad of an idea. But right here, I would just wait on oil. I would just wait. I don't like this where it's sitting right now, just in the middle of this consolidation range. So yeah, that's the idea on oil. Again, I'm not really too keen on trading oil. It's been a chop monster for many months now. See, this is what the type of conditions you want to trade in. This is what you want to avoid. And this is where having a basket of pairs comes into play, because if you're just an oil trader, this becomes really hard to just trade. Whereas for me, when I'm trading Pulse, I have a large basket of assets right here. If indices are consolidating, I can look at gold. If gold's consolidating, I can look at oil. If oil's consolidating, I look at currencies, right? It always gives me different assets to look at, right? Because the money flows from asset to asset differently, and not every asset's always going to be in a straight uptrend with high probability conditions, you know? Usain, except gold. Yeah, gold has been a fucking monster. Except actually, we're going to dive into that. Actually doesn't look too nice as of lately. I actually don't see much on that right now. But yeah, that's oil. We'll actually just dive right into gold. Let's go back to the forecast list. And gold right here, I just don't like where we're at right now. I'm hesitant to short. Why? Because we have been, like I just mentioned, just super bullish at all-time highs. Very bullish order flow on the monthly basis. Or now on the weekly, we are starting to get really choppy. It's been really struggling to find any sort of bullish follow through. Now we're seeing this big aggressive bearish displacement lower. But again, I'm a bit hesitant to just look for shorts now, just because of how strong we have been on a higher time frame basis. Super strong bullish order flow. I honestly I don't like where we're at right here. We had some potential right here. We had some potential for follow through off this weekly bag. We were creating daily for value gaps. We had daily pivot context right here. Just a little great example we're going to use on that video coming up. We had new for value gaps created right here, but now we're failing that, creating bearish for value gaps. Actually creating a new bearish for value gap right there. I'm not really a fan of this. Not really a fan of this. If we, for intraday pulse, if we do get a daily for value gap right here, we do have confirmed bearish order flow because we are creating a new for value gap right there. We did just take that low. Maybe I'll keep an eye on that for pulse if we just want to get a little scalp of a reaction off of that daily gap in here. But in terms of like summit model trades for longer term swings, I would not be interested in any of this range right here. And so we either like just completely run that low or just run this high and then we continue looking higher right there. But in this general area where we have this bullish rejection right here, this strong bearish rejection right here, this is what is for me a 50-50 area where we have a lot of, well, for the most part right here, we had a bullish trend, bullish intention, suddenly major bearish intention. So what's happening right here? Well, that's 50-50. Both sides have equal power right here. So how do you get out of that? You wait for price to run these rejection highs or rejection lows, because this entire area right here is what would become a potential just consolidation zone where it's 50-50. No one is holding more strength right here. No side is winning the strength battle right now. The arm wrestle, we'll call it that. It's at a standstill right now. So that is what I would wait for. I really don't like this whole area that gold has created right here. Let's take a look at silver. Silver is a bit stronger actually. We just take a look at the higher time frames. On a monthly basis, what we just do. We have a day left, so we may potentially sweep this monthly swing high. That would not be too nice. If we wanted to see continuation, would have loved to close above that, but with a day left, not too sure if we end up doing that, that would become a bearish argument on a monthly. Weekly 2 candle rejection right here, failing at the moment. Weekly, go back to that 2 candle rejection right here, just sweeping previous candles low. Failing to continue expanding higher right here. And you know why it's failing to continue expanding higher and why we're seeing lackluster price action? Because we had a daily bearish for value gap coming into that. Whoops, that's not it. So this is what creates trapped order flow conditions. When we have price stuck between a higher time frame discount array in the form of that weekly gap and a higher time frame premium array in the form of that daily bearish for value gap. So price is trapped. Think of it as prices in a cage. If you want to get the highest probability conditions, you would want to see price at least run this high right here, and this entire area right here, just above this. Let me see if I can get the tool right. This entire area right here, this becomes your no resistance area, where now we've completely removed any sort of opposing resistance right here, creating that trapped order flow. And right here, there's no premium array that can possibly send price lower other than the actual target. So we have very easy trading conditions above that, which is why for this 4-hour for value gap setup, which I am 99% sure someone in here probably took, just because, you know, weekly IRL to ERL, take the first 4-hour for value gap or the weekly. Did anyone in here take this? I would love to know if anyone here took this, because I'm very positive someone took a loss on this. Because they saw, oh, textbook 2 candle rejection off of the weekly 4-hour for a value gap. But what's in your way right here is daily fair value gap, which, to no surprise, likely causes price action like this. So that's an example of a setup which had the higher time frame context with the entry function that you shouldn't take. Weekly to 4-hour, take the 4-hour impulse shift, but why didn't it pan out? We're in trapped order flow. There's a daily for value gap there. So yeah, I think that's a very interesting lesson right there as to why you should have avoided that, even though it looked, at least the entry function looks so crispy. Oop, we're lagging. Nico, that's actually a good point. You can target that daily for value gap for like lower time frame trades right here. Absolutely. And that's what I do with my pulse model. I target these opposing resistance levels. But if we're swinging and demanding price to actually make a longer term sustained move, this is where you don't want to take your higher time frame directly like this on the 4-hour and then target 2 hour out of that. Because remember, now we're swinging and we're holding for longer. We're demanding a lot more out of price. Whereas for your intraday trades, you can just play the reactions up towards that. Well, when you finally get in here, this is when you don't want to trade. And here's a great example of why you don't want to trade that. Look at the type of price action we encounter in there. Just straight up chop. So that is a beautiful example, honestly, as to something you can avoid. But that's silver. As to what the hell can happen now, again, the same exact thing stands. We have a bullish rejection right here, a very strong bearish rejection. This entire area now becomes, for me, 50-50. So what I would want to see is we either run these lows to go lower or run these highs to go higher. And that's how you save yourself from potential consolidations. That's how you spot consolidations and lower probability trading conditions. So that's that. That's silver. Let's go on to Bitcoin. Let's delete everything here. So on Bitcoin, right, we had this bullish monthly IRL to euro that was complete. All right, going down to the weekly. We then had this weekly fair value gap right here. And in case you're wondering where you can grab these indicators, that's the order flow indicator. And all these indicators are pretty damn neat. The link is in the bio if you do want to learn more about them. And if you do want to learn more about them, again, I have a whole video on my channel. It's the most recent one that explains exactly how I utilize them. They save me a shit ton of time, shit ton of screen time. A lot of the stuff that you really waste time with is all automated. So you have more mental clarity, more mental capital to actually focus on the things that matter, like actual execution. And you're not wasting time drawing a bunch of drawings. That could be all done for you. As well as, again, that's the beautiful SMT indicator right here. Auto marks SMT. And the entry alert indicator right here. So you don't miss a setup ever again. But moving on, back to Bitcoin, we have pivot context right here, which again, this goes into what the next video will be all about. Just pivot context, sweeping that swing low right there, likely sticking that swing high. Okay, so that's great. That looks really nice on a weekly basis. Going down into the daily, we have this daily fair value gap right here. This lo-fi is really hitting, bro. I'm gonna save this playlist because this is like the perfect vibe. I like this more than the birds. I don't know if you guys been watching for a while. Y'all know about the birds I usually play. Yes, the indicator highlights all fair value gaps. Any fair value gap you want it. The 15-minute down to the goddamn tick chart if you want that, you psychopath. But yes, you can do that. Whatever you want, you can customize it. Oh, back to the daily. We have this daily IRL right here that we have already completed context right now, but we're not following through higher on that. That is sus. That is very weird. Let's mark that daily. And the indicator doesn't mark this because we already completed context, right? So the indicator is not going to like clutter your charts with fair value gaps everywhere. It also does a great job of cleaning your chart. When context is complete, the indicator removes the ERL and the IRL. But if we were to like go back into replay, you would see that daily fair value gap marked up and the daily ERL. So let's delete everything. And there it is, the daily context, as well as the overlapping level with insane accuracy right here, right? So this is your context marked up all automatically down into the lower time frames. You will see all that transposed into the lower time frames, as well as all your previous day high, previous day lows, all those relevant levels as well. All right. Pivot context will be the next video, so don't worry if you're not sure what that is. But as for what can happen next on Bitcoin, well, just based on how we're lacking any sort of follow through above this swing high right here, and it looked like if we go to the 1 hour, we're seeing major, order flow shifting. So remember, higher time frame wicks are just lower time frame fair value gaps, shifting order flow from bullish to bearish. What can potentially happen here if we still do want to move higher would come off of the pivot context, which would just be the swing low that was formed right here inside that gap. If we do want to move higher, we can potentially come down, sweep that, and then move higher. Since we don't want to expand already and create a new high probability leg, we may just sweep that low probability legs low to then continue pushing higher towards these highs. So this level will be something to watch out for. So that's Bitcoin. Take a look at ES. Brother, how many indicators in the package? A whole handful. There's a lot for the price of like one, right? You get the order flow indicator, you get the entry alerts, the navigator, the risk manager, the SMT. You will also get access to the entry alerts bot Discord channel, which we have a whole bot on Discord that will do that automatically for you on like 50 assets, I think. It'll give you alerts off of 1 hour and 4 hour entry functions that are created, or entry rejections that are created off of monthly, weekly, and daily context on all the assets I watch for the Summit watch list. I think that's fucking sick. No one else has that. No one else has that. As well as access to like the masterclass that I recorded a while ago, going into very in depth over my model and how to use them as well. And yeah, the indicator course as well. Ooh, that's actually something I need to mention as well. We have launched an entire course for the indicator, and this is like very close to like what I'm going to teach in my own upcoming course. That is huge. Nils has been working on that. There is a whole like A through Z guide on how to use the indicators and how to understand the concepts that go into the indicators. So that is also included in the WAP membership with the indicators. A whole course. It's not just indicators. It's also like the concepts behind them, so you know exactly how to use them. You're not just going into it blind. But it's like, dude, there's like, I don't know how many modules there is. It goes very in depth. Nils has done a very great job with that, working on that. It's super cool, in all honesty. Super sick. But yeah, that is brand new. And we're releasing a few more modules this week, and then we'll be done. But we've been releasing like lessons weekly. But that's major. That is major. So if you're wondering, like, how do I use it? I feel like I'm lost with it. No, you're not going to have any sort of gray areas. It is all in there. Everything you need to know about how to use them correctly, it's there. So moving on to ES. Same thing, same process, going down from the top. Let's delete all this. And, well, what do you know? What do you know right here? Is this something we talked about in a forecast not long ago in the month of early May, right when this monthly candle closed? I was talking about this monthly fair value gap and how I didn't expect it to potentially move lower. Now, again, we were still gauging the reactions we saw in there, and if we saw the daily fair value gaps flip, the daily order flow flip, then yes, okay, we can move lower. But I didn't expect that. Why? Because when you have these fair value gaps right here that are small, with so much opposing intention coming into it, they are very low probability to hold. Pair that with the fact that what is happening on the monthly, we are in extremely bullish order flow conditions. I mean, this is fucking ES, bro. This is the US stock market. You can literally just always be bullish and be right. So it's very low probability for this gap to just send us lower. It's not really the case. We want to submit to this order flow right here. In bullish order flow, any move seen below swing lows, you want to view those as stop hunts. So that's exactly what happened right here. Major stop hunt, major lower wick, higher time frame wicks, or lower time frame order flow shifting from bearish to bullish. That's exactly what happened right here. This is that huge lower wick coming into that monthly gap. Way too much bullish intention for this to just have a sharp reversal right here. All right. But again, this is a US stock market. You can literally just be bullish every single, for the most part, day and be right. All right. So that is that. Very simple right here. I think the bias is very simple for ES and NASDAQ coming into this next week. We're going all-time highs. That's it. We're just going all-time highs. We have a very clear daily bullish order flow leg right here. Where can we move higher from? Well, let's just start marking out this daily fair value gap right here. Which, can we retrace into that, or can we already move higher? Well, that just comes down into reading the lower time frame order flow right here on the 4 hour, 1 hour, the compass time frames, essentially these right here. We have on the 4 hour this major rejection right here off of what? Off of this. We have this 4 hour fair value gap right here. Oh, sorry, the indicator is doing it automatically. We're having already a major rejection right here. Let's just move this daily just for clarity right here. Major 4 hour respect candle right here. We are so close to the draw on liquidity. It really wouldn't surprise me if we just run right to it. It's typically what tends to happen when we're close to the draw. Price is in a hurry to get there, and then it might want to retrace into the daily. And just based on this 4 hour candle, it's looking like it just wants to continue pushing higher. So that would not surprise me if we just bag that daily that we just marked right here and just reach for it already. On the 1 hour, we are currently in this bearish 1 hour for value gap. But I am leaning towards this failing, just again, based on how much bullish intention came back into it. Again, you don't want to take trades anywhere in here. You want to wait until either we run this high and then we can look for longs up towards that, or we start getting bearish for value gaps down lower off of that, and then start looking for shorts right here. And we'll see what happens right there. Or into that daily for value gap, sorry. And then we'll see what reactions we get out of that daily. But you don't want to trade this. You want to be waiting until either we run that high or we come into that daily to then move higher off of that. That's the idea right here. And we're just gauging the reactions on these lower time frames, the compass time frames, in order to understand if we already want to move higher or if we want to wait on for the daily. right? Simple as that. So we'll get more information as we, wake up tomorrow in the New York AM session, and then we'll see what happens there. But that's the idea on ES. I am bullish. So simple as that. Do we want to go higher right now, or do we want to wait for the daily? That is up for these compass timeframes to decide. We react and we adapt to whatever happens in the kill zone that we're trading, which for me would be the New York AM session, and we go with that. So that's it. That's it on ES and NASDAQ. Or ES, let's go to NASDAQ right now. It should be the same exact idea pretty much. Same exact idea pretty much. Again, we just discussed this idea right here on ES. We're bullish. That's also, what is that? That's also monthly flip context. This is also just monthly flip context, where we knew flip context by the time this candle right here just sliced right through it. We already had a very bullish idea. For the entire month of June, already just bullish, right? We can expect this next candle to just continue expanding higher once June opened. Very clear read right here. Once this closed like this, monthly flip context in play. If we're failing to offer for value, we're going to seek liquidity. Remember, the market only does those two things: offer fair value and seek liquidity. If it fails to do one, it's going to do the other. That is how you can simplify your entire lens and view on price. If it fails to offer fair value fails to offer fair value at this fair value gap, it's going to seek opposing liquidity up here. So that's it. That's it. If you can view the market simply through those two things, you're going to be way better off by just asking yourself those two questions: offering for value or seeking liquidity. Is price offering for value or seeking liquidity? That's all you want to repeat in your head. And that is how simple analysis can be, right? You don't want to overcomplicate things. In life, in trading, in everything, in my opinion, less is always more. Always, always, always. You want to have less. So here, this daily for value gap right here. And yeah, same exact process. The lower time frame compass right here, the 4 hour, 1 hour, 15 minute, is going to tell us if we want to hold up for that daily to then go higher, or we already want to push higher. Which is the same idea with ES, just inside of these 1 hour gaps. Are we going to reject, go into the daily, or are we going to just continue pushing higher towards all-time highs right there and disrespect this 1 hour, flip it, and then go higher? We'll see. But again, nothing to do right in there. And I believe that's it. As for YM, I don't really look at YM because it tends to be like the black sheep of the family, basically, because it doesn't really move alongside ES and NQ like ES and NQ move with each other. So oftentimes YM will be doing some other thing or moving just not as in alignment with ES and NQ. As you can see, they look very similar. YM is still all the way down here. So I don't really like looking at YM. I feel like it just throws me off. It throws my analysis off, and I just like to focus on ES and NQ. But if we're bullish on ES and NQ, we're bullish on YM. So yeah, we can leave it at that. Do you get notifications if there's a setup? Oh, absolutely. That's the whole point of the entry alert indicator. You will get alerted to your phone, to your watch. I mean, this is what they would look like. Serpico entry alerts are active. These are some alerts I set like last week on Friday for the 1 minute impulse shifts. They're still active right here. I actually got to clear some of these alerts up just to keep it clean. But yes, you get them to your phone, your Apple Watch, email, whatever you want. You're not going to miss it. Definitely. And yeah, guys, that's that. That was a W forecast, I think, for the first one in a long time back here on YouTube. How long has it been? We did that in an hour exactly. Beautiful. Is there anything, any charts you want me to look at? Any charts y'all want me to look at here before I head out? Because that's it. It's the forecast. When is the mentorship launch? Honestly, like, I can't even give you a date. Sometime this year. We'll keep it at that. I don't want to give a date. There's a lot of work that's still to be done. The indicator course, Emmanuel, honestly is literally, in my opinion, leagues above any sort of ICT course out there, and it's literally like part of the indicator for like 49 bucks a month. Like it's dead ass, like in my opinion. Of course I'm going to say this, but I really do think it's better than any course out there until mine comes out. But yeah, appreciate you tuning in, Nico. Appreciate you tuning in, brother. Then yeah, that's it, guys. Yeah, trying to keep these forecasts for. I know some of them can drone on, but if you want to just tune out, you guys got the main gist. You can for sure just head out, end it here. I'm just gonna stick around for some questions, some chart requests. JPY real quick. I mean, we already looked at JPY. Or do you mean the crosses? JPY looks like just a chop monster. Your NASDAQ is already at all-time highs. Well, if your NASDAQ's already at all-time highs, it might be because of this right here. Your B adjusted is toggled off. See how now it's at all-time highs? I have mine toggled on. And this is what the price action would be. And what all that does is it adjusts for contract changes. Right? Because NASDAQ has contracts. So the contracts change. What this does is it adjusts it automatically for you. And this is the price action that will give you. So this is what I use. This is what I trade. Trade the B adjusted price action. Can you apply the same trading technique for options? Absolutely. It works everywhere. It also works for stocks. It also works for stocks right here. Like for example, Nvidia, I use the same strategy I use, but just to buy long-term positions on Nvidia, and now we're up good, right? Let's take a look at what happened right here. Nvidia, I saw this monthly fair value gap. I trust in Nvidia. Bought it right here. And I hold it. My plan for Nvidia is to hold it for many years. So even if we came back and dipped, I just bought more, because what happened over here? Well, we just swept the swing low in bullish order flow, and then we just continued pushing higher. So like, what is that? Oh, pivot context. That's literally the video we're gonna make. So that's a great example. I bought in here, and then what happened? I bought some more when it came back down, and now we're back up at a new all-time highs. So it does work on stocks. It works on everything. Quite good. Quite good. I believe I bought Tesla somewhere here as well for that monthly fair value gap. I'm still holding them. PLTR has been beautiful too. Just respecting this typical monthly. If you want to do this on stocks, I'd recommend you do it on like the monthly basis for like longer term holding. These monthly fair value gaps can be really beautiful. Here's one on PLTR. You could have dip bought this monthly gap. On the weekly, I know there's a bunch. Monthly fair value gap buy, weekly fair value gap bought right there. Pretty cool. Pretty cool. GBP AUD. I don't use weekly and daily profiles, Mr. Fam. I do not. I do not use that. All right, what did you want me to look at? GBP AUD. Major bearish wick right here. Weekly, not the most clarity. There's no sort of weekly fair value gap. Oh wait, we do have a weekly gap right here, but I don't like how choppy we've been inside of it. The more time price spends in a fair value gap, in my eyes, the lower probability that fair value gap becomes. Really, like the moment price comes into a fair value gap, you want to consider that used up, mitigated. And then anything after that, if we want to push higher, would have to either be off of, and this is what we're going to talk about in the pivot context video, would either have to be off of a 2-candle rejection or pivot context, right? Because at that point, the first time price enters a fair value gap, you can consider it used, and you can just delete it off your chart, honestly. Because now if we want to move higher, it's going to happen off of other discount arrays, like a 2-candle rejection, your previous candle low, or a swing low that gets formed in the gap that we sweep to then use as a catalyst to move higher. But over here on GBP AUD, nothing really interests me. I don't like this price action right here. Looks like it's just stuck in this consolidation. It's just in this range right here. I don't like playing these ranges. I want to see prices placed above those ranges. Then that might be interesting. Euro AUD struggling right here, just consolidating, failing to really follow through right now. How to journal properly. I have a whole video on that. It's like my first video on my channel. If you want to take a look at that. It's a bit outdated, honestly. Like, if you look at that video, you'll see me trading very different to how I trade today. So I should actually update that video. And some new things I also do. So that's another great idea. It's another great idea. But yeah, guys, I believe we're gonna wrap it up there. Appreciate you all tuning in. The recording of this video will be on the channel, so it's there. You won't lose it. It's on the live stream section if you want to find it. But appreciate you guys. Appreciate you guys. Hope you all have a killer week. Appreciate you, Volt, for being a mod. And yeah. Oh, I'll do that. DP, I can do that. In here, I have my long watch list, which I actually have to fix. It's a bit messy right now. Like, actually, CHF JPY is looking quite bullish. Can keep that there. Euro. The way I do this, the way I should do, like, it's really messy right now. I filter based on, I organize this based on what's the highest interest right now. So for me, it would be like Euro, like we mentioned at the beginning of the forecast. Euro UD, not so much right now. BTC. Silver, not really interesting. We can remove that. I actually have 2 Euro USDs because I have like my Think Markets, which I actually trade on. But we'll just delete that one. Euro CAD I was watching last week for longs, but we already made the move. I wanted this daily gap right here, but it's pretty cooked. CHF JPY. Actually pretty nice. It actually came into this fair value gap, volume imbalance, and push higher. Off of this right here, this 1 hour. This thing's at all-time highs, right? Damn. And then this is just my short watch. It's literally the way I have this organized is my long focus list, my short focus list, and then I have a waiting list here on things that I'm just waiting for a little more confirmation, or I'm waiting for context to develop. Over here, I just have my Think Markets. It's the same watch list as Summit right here, just for Think Markets, because on Think Markets, the charts themselves, they do look a bit different. Sometimes it can have like ugly little gaps. I don't know if you see it. It might be hard for like an untrained eye to see the difference, but like, for example, this is AUD CAD on Think Markets, and this is AUD CAD on Oanda. It might be like something small, but I like using the Oanda price action. I think it's more true because Think Markets can have a little bit different price action. It can be a little more gappy. But that's why I have 2 of these watch lists. These are the exact same watch lists. Just this is all using Oanda, which is what I do my weekly forecast on. Because again, I just like the price action on that broker the most. And then I'll just execute with my Think Markets over here with this list. I just use this list for execution. And then over here is just my stock watch list. And this pink is just some examples I wanted to gather for like a YouTube video. And just pretty much just utilize these for a video and be like, all right, guys, blah, blah, blah. Type of stuff. Yes, Volt is AI. He is a purely AI built. I used AI to build him. I used ChatGPT to build Volt. He's not a real person. If there's nothing on the monthly, weekly, and daily, what's the minimum context you look for taking intraday entries? Well, if you have a clear bias, you can use the 15-minute, 4-hour, or the 15-minute, 1 hour, and 50. Goddamn, the 15-minute, 1 hour, and 4 hour as context areas to play in line with a bias. But what you do need is a bias established on the higher time frame. But remember, that bias doesn't have to be just monthly or weekly or daily IRO to ERO. It can also be things like candlestick logic. It could also be things as simple as that, like sweeping previous day's low, we can go seek previous day high. And there's no fair value gap that we're come into, but just using candlestick logic can do that. And then in there, you just want to look at 15-minute for value gaps, 1 hour for value gaps, 4 hour for value gaps, and just look to long that. Because you don't always need a daily, for pulse model specifically, you don't need daily IRL. Don't get that mistaken. That's Summit model specifically. Summit model is daily, monthly, weekly context. Whereas pulse, you can get way different with the time frames. You can utilize the 15-minute, 1 hour, and 4 hour. These right here, your compass time frames. But you need to have a clear drawn liquidity in order to make use of them properly. You don't just go into the 15-minute and take any 15-minute bullish for value gap that you see in the New York session. You have to make sure you have a higher time frame bias to align with that. Hey Pickle, how do you use the XY to confirm swing trades? Does it require FEG to form away from it, or just a displacement away from it will do? Well, for dollar, I just like to see, sort of like how you mentioned it, I want to see dollar come into its higher time frame point of interest. It's daily right here. And if I see a displacement just created on dollar and euro has a really clean displacement higher, I would look to long that. Can you tell us when you swing and when you scalp? I do both. I literally do both. Because swing doesn't require a lot of time. Scalping, I can just do intraday inside of my kill zone and while I am in swings. So yeah, I just do both. But I'm gonna wrap it up, guys. I think that's good. I think that's good for today. Hope that is great. No problem, Kimberly. Appreciate you tuning in. Much love, fam. Peace out. Peace out.